Okay, Japan's stocks plunged by nearly 6% and biggest drop since the start of pandemic, and you're going to understand why the drop in Bitcoin. It doesn't have anything. No, actually, it is related to it, but you shouldn't care because Bitcoin is the only private property that you ever could have in your life, in your lifetime, because the government cannot take from you. Your wife cannot take from you. Your kid cannot take from you because you got a password and nobody else. Like it's yours. It's yours. That's why it's more important. This stocks is more important than dollar and everything else because you have to analyze it by the fundamental thing. Let me read this new for you real quick. Japanese stocks plunged Friday as global markets were rattled by worries about the U.S. economy and as traders braced for further interest rate hikes from the Bank of Japan. The Nikkei 225 ended 5.8% lower, the index's biggest daily drop since March 2020. It extended a global stock rout that began following the release of weak U.S. economic data. The Japanese benchmark had already lost 2.5% Thursday and has now closed at its lowest level since January. European markets also opened lower Friday. The benchmark Stoxx Europe 600 index was down 1.4%. Germany's DAX and France's CAC 40 were down 1.2% and 0.6% respectively. London's bank heavily FTSE 100 was 0.4% lower. US futures were indicating another weak open for Wall Street with S&P 500 future down 0.9%. On Wednesday, the Bank of Japan raised interest rates by 15 basis points to 0.25% in its second hike this year and announced plans to taper its bond buying. Traders expect more rate hikes to come later this year and as the central bank tries to contain inflation. The BOJ made a hawkish shift after its surprising 15 basis point rate hike, said Ken Cheung, director of foreign exchange strategy at Mizuho Securities. Importantly, the BOJ flagged the inflation upside risks and left the door open for further rate hikes. The hike was narrow the difference in interest rates between the United States and Japan, which pushed the Japanese yen higher against the greenback. The dollar has fallen by more than 4% against the Japanese currency since the middle of last month. On Friday, it weakened further against the yen, down 0.3% to 148.9. The risk of rising yen volatility threatens the decade-long bull market of Japanese equities. Frank Benzimer, head of Asia equity strategy at Societe Generale, said in a research note on Thursday. He added that a rapid appreciation of the currency would hit profits at the country's exporters. The yen has broadly weakened over the past 4 years. It was down 40% against the US dollar and down 30% against the euro during that period. Combined with a strong corporate earnings and effective corporate governance reforms, the weak yen propelled the Nikkei 225 to all-time highs this year. But as the yen strengthened over the past 3 weeks, Japanese equities have corrected. The Nikkei is down 12% since July 12. From a Japanese equity perspective, the earnings boost from a weak yen is set to diminish, Citi analysts said on Thursday, but they remain positive about Japanese stocks in the long run, as inflation is gaining traction and a positive wage price spiral is strengthening in the economy. The hope is that rising wages and prices can help the country shake off years of economic weakness. Elsewhere in Asia, markets tumbled across the board on Friday. South Korea's coffee declined 3.7%. Australia's S&P ASX 200 dropped 2.1%. Hong Kong's Hang Seng Index also lost 2.1%, and China's Shanghai Composite was down 0.9%. I was expecting that would happen um, with China, but it wasn't the case. But we all know how China cover the numbers. Overnight on Wall Street, the Dow Industrial Average slid 1.2% as fresh data stock fears that the U.S. economy is weakening with interest rates at at a 23-year high. The S&P 500 lost 1.4% and the Nasdaq Composite fell 2.3%. New economic data reveal that first-time applications for jobless benefits rose last week to an estimated 249,000 fillings. That's the highest tally since last August, according to the Labor Department. Meanwhile, continuing claims filed by people who have received unemployment benefits for at least a week jumped to 1.877 million. That's the highest level since November 2021. Markets firm up expectations of rate cuts as weak manufacturing data show the U.S. economy is meaningfully slowing. ANZ Analysis wrote in a note on Friday they expect the Federal Reserve to make 3 rate cuts in this year. The Fed signaled at its policy meeting on Wednesday that a long-awaited rate cut is on the table for September. So I'm going to show you a tweet from Peter Schiff. He doesn't like Bitcoin, but it's valuable to share another opinions here because he says like central banks have played with fire for years. Now the world is about to be burned. They kept rates artificially low, blowing up a global debt bubble. But as inflation reared its head, rising rates pricked that bubble. Now it's time to pay the piper. The game is over. And I agree with him. But I would ask him what is the other solution for it? Because Bitcoin's here. What would be the best solution? Another private currency controlled by the government? Like he says here, Japanese stock market is crashing. Dow and Nasdaq futures are falling. Bitcoin, Ether are crashing from Friday's close. The Japanese yen continues to rise. Gold is down as well. This is a series of stuff. Join me on blah blah blah. He doesn't like Bitcoin at all. Okay, but the thing is, what is the solution then? Because the only solution that I can see here is Bitcoin. Bitcoin could be crashing down right now, but if you analyze the fundamental part of it, it's probably going to increase in the long term, differently from the Japan stock because the government prints money and they live in this, negative interest rates. So this is going to crash the market and not Bitcoin at all. And if you want to learn more about Bitcoin, check the link in the description. I'm not going to sell anything. It's just a view explaining about it. Okay.